In the grand scheme of human affairs, Canada has been doing just fine, thank you very much. The economy keeps plodding along, growing modestly if unspectacularly. Housing prices in the big cities have gone bonkers, enriching homeowners. And Tim Hortons is still serving up those amazing honey crawlers to delighted customers from coast to coast. But beneath the surface, there are unsettling signs that all is not well in the Great White North. Productivity growth, that key driver of rising living standards, has slowed to a crawl, and unless the governing Liberal Party led by Prime Minister Justin Trudeau confronts this challenge head-on, Canada risks falling further and further behind other advanced nations. That's the sobering message delivered in a new report by a high-powered group of Canadian economists and former political leaders like David Dodge, the respected former Bank of Canada governor. Their warning could not be more stark. The overriding objective of federal and provincial governments going forward has got to be to raise the productivity of workers. The numbers are indeed startling. From 2007 to 2023, GDP per capita in Canada grew a pitiful 6.8%, far below the 21.4% increase in the United States, 19.6% in Australia, and 11.8% in the eurozone over that period. It's a reflection of an economy stuck in neutral, sputtering along while other countries open up pedal to the metal. Canada was once an economic dynamo, rapidly catching up to its richer U.S. neighbor after World War II. But that convergence stalled out decades ago. Today, the average Canadian worker produces around 80% as much output per hour as the average American worker, a productivity gap that has barely budged in a generation. What gives? Part of the problem is too little business investment in new machinery, technology, and research that can turbocharge productivity. Canadian companies, flush with profits, have been hoarding cash rather than reinvesting enough to expand their productive capacity. But households are also to blame, consuming too much and saving too little, in the view of Dodge and his co-authors, including former Premiers Christy Clark of British Columbia and Jason Kenney of Alberta. They note that Canadians invest an outsized share of their savings in housing, compared to peer nations, even adjusting for population growth. At the same time, years of deficit spending by Liberal and Conservative governments alike have left Canada's public finances on an unsustainable path, with debt levels climbing ever higher. That makes it harder to fund productivity-enhancing investments in infrastructure, innovation, and human capital. Trudeau has paid lip service to the need to boost competitiveness and living standards. But his government's actions, like raising capital gains taxes and phasing out tax incentives for business investment, do not directionally nor logically fit into any strategy to lift Canada's sluggish productivity trend. Rather than ad hoc tinkering with the tax code, what Canada needs is a comprehensive strategy to tackle the productivity problem, the report argues. That means a clear, predictable policy framework to catalyze sustained private investment in productive capacity across all sectors. It means credible long-term fiscal plans that rein in deficits and debt. And it means open markets and avoiding the siren song of protectionism, even in areas like electric vehicles where U.S. policy is distorting continental supply chains. There are no quick fixes or silver bullets here. Reviving productivity growth in aging, mature economies like Canada is one of the toughest challenges facing policymakers today. It will require tough choices on taxes, spending, and structural reforms that politicians often shy away from. But as the old saying goes, you cannot redistribute what you do not produce. For too long, Canada has been coasting, relying on past glories while other nations press ahead. Unless it finally comes to grips with its productivity woes, the true north strong and free risks being passed by in a highly competitive global economy. Tackling this will demand national focus and commitment across partisan lines. The alternative is a future of diminished prospects and living standards for the Maple Leafs' beloved younger-than-Miss Renewed crowd. And no amount of double-doubles can make up for that harsh reality.